1 Million Strategy Roundtable for Entrepreneurs. 1M, as you know, is the first global virtual accelerator for technology startups in the world. I operate this from Silicon Valley, but as you figured out, Maureen is in New Jersey and our team is all over the world. The entrepreneurs are all over the world. So it is really a global program. And we've been doing this since 2008. So this is the 693rd free mentoring roundtable that we are doing. And of course, we do this format of roundtables in the premium program as well on a weekly basis. So we do a lot of online mentoring sessions. We're going to start today's program with a conversation with Ray Wu, managing partner of Alumni Ventures AI Fund. Ray, welcome to the show.
Thanks for having me.
Ray, since this is the first time we have you here, let's start with some introduction of your work, your background, as well as Alumni Ventures.
Sure, happy to do that. Thanks a lot for having me. I started as a technologist by training. So my background was actually in electrical engineering. So I started with doing compilers on mainframe when I started a long time ago. Then I was an operator for many years. I had my own company, and then I was in corporate ventures for many years. Initially with Cisco, doing investment merger acquisition. I ran HP Ventures for 4 years. Then I did a bunch of cross-border investments between Asia and the US for almost a decade. When the world was flat, I was traveling 250,000 miles a year. And then COVID happened. So it becomes a little bit harder to travel. I joined Alumni Ventures about more than four years ago, start building on top of the multiple funds on top of Alumni Ventures. Right now, focusing on AI, focusing on blockchain and a few university school funds. In terms of the Alumni Ventures, it is set up about 10 years ago. So the whole goal is to democratize the VC access for individual investors. So think about anyone who can build mutual fund portfolios with large public companies. We're allowing anyone to build venture portfolios, essentially with 15 to 20 portfolio companies on a yearly basis for each fund. And then with minimum investment, about $10,000. So anyone can join and be able to have exposure to the private market. So we, as I mentioned, 10 years ago, we raised over $1.4 billion from individual investors who are one of the most active VC in the US based on PitchBook data. Probably 200, 300 deals on a yearly basis. We co-invest with well-established venture capitalist firms, such as Kleiner Perkins, Sequoia, A6EZ of the world. And then our value add is essentially networks. So you think about it, we have about 850,000 community members from more than 20 university alumni network. And that's, one area that really helps the entrepreneurs tap into a large university alumni network that they can connect into, finding employees, advisors, board members. So that's on the human resource side. Because we're so active, we have more than 1,400 portfolio companies, which is really helpful. We have a CEO service teams, which connect CEO with other CEOs. So which is a great way for entrepreneurs to tap into our network and to be able to build an ecosystem within our ecosystem as well. So that's the value add. That's how we can co-invest with some of the well-known investors.
Does that mean that you are following rounds? You don't lead rounds?
We don't lead. We're a co-investor model. That's kind of reason we can do so many deals on a yearly basis.
Yes, of course.
It's the whole setup is to, again, like I mentioned, is to allow any investor to have a diverse portfolio. I mean, in a normal approach, I would say had my own fund that probably is doing 5 to 10, maybe 5 deals on a yearly basis, right? So I lead my own deal, write my deal term sheets. In this model, because we co-invest with well-established other VCs, so we don't have to write a term sheet, allows us to have wider exposure and quicker access to a lot of deals, and we're just adding our network along with our investment.
Okay, so let's talk about some of the companies, especially in your AI fund that you have invested in, just to understand the AI thesis, investment thesis, as well as the trends that you are seeing.
Sure. We focus on AI mainly from, I'd say, the areas where what empowers the type of AI native type of companies we call AI first. So we're launching our fund is called AI First Fund. So essentially, think about the company won't exist if not because large language models or just any kind of language models, the proprietary data, the agent as a foundation versus a bolt down. So that spans across from infrastructure to applications, right? So if you think about infrastructures, we've been doing a lot of infrastructure investment in the last few years, such as Neo Cloud, like Lambda Labs. CoreWeave when IPO this year has done very well. Lambda is in a similar category. We have done a company called Cohere, which is a large language model for enterprise. We have done a company called Grok, which is more of a fast, high-performing inference platform. Then others like unstructured, transform complex unstructured data into structured data for AI. So across the infrastructure areas, we have done quite a lot of investments. Lately, we're moving more into application areas. We start to see, just because of DeepSeek, because the language maturity, cost structure coming down, there's a lot of kind of more AI powered verticals coming in, new business models, right? So we have done quite a few of these investments in the patents, in the accounting, in the insurance, in the drug discoveries, in the so across the different verticals. So that's our theme is pretty much anything that empower this new generation of AI enabled services and platforms.
And if you were to highlight some themes that you're seeing in the deal flow right now, what are some of the trends that you're seeing?
Like I mentioned, the infrastructure has always been one of the core themes, only because at this time, I think a lot is around infrastructure, just like we saw in the in .com days, or internet wave and mobile wave, right? So internet, the same thing. One was in Cisco, was mainly the infrastructure build out first before we see like Facebook, Google of the world come in and kind of building on top of that. Then mobile is the same thing. I mean, mobile happened, and you see a lot of Ubers, Airbnbs building on top of it. So that kind of infrastructure wave is the first wave we call AI first infrastructure. So those kind of areas is one. Then we start to see more of the what we call AI first type of verticals, industries, kind of industry transformation. Because of that, AI is empowering a lot of these kind of new areas from kind of new ways. Even sometimes you see the AI powered roll-ups, these kind of new industries kind of being taken over by some of the AI.
Have you invested in AI powered roll-ups?
We have done a few deals, and this is one area we spend a lot of time looking at it. We normally talk about high touch, high power, because essentially high touch.
So let me just a second for the audience. Let me explain what AI powered roll-ups are. So the thesis is that there are traditional companies, and by infusing AI into all dimensions of an existing company, you can get huge leverage out of that company. And you assume that you're taking a company that has, really good customer base and so forth, and then you're basically putting AI in every dimension of that company and turning that into an AI first company, but it has its own business. And this is an investment thesis that has been floating around Silicon Valley. Silicon Valley has never done this before. This is the first time we are seeing this kind of deals.
Yes.
So, do you have any example that you have invested in? I would love to hear more about one such example.
Sure. Yeah, this is definitely a new theme. Only because I think it is traditionally only in the PE realm, and this is the first time. I think PE is all about kind of human cost is one of the
Cost cutting.
component of cost
PE
cutting,
is
right?
all about cost cutting, yeah.
Yeah, AI as an agent is sort of semi-human to a certain degree, and not only the augmentation, but also replacement to a certain extent. So we do see that this kind of high-touch, high-tech models works out. We have done a company called Roofer. So essentially, it's more of the kind of roof aggregation companies. Essentially, on the their basic model is that you'd be able to do vertical roll-ups on the roofing service companies, and which is one of the most expensive costs on house improvement. But also building a brand that you can actually get people who want to come in and as a lead gen, and then they use technology as drones, kind of taking photos of the roof and be able to give you a quote very quickly. And then either they will have this kind of service team to help, or they basically would give out to the local, kind of more of the local partners that they can service. So over time, essentially build up more of a national footage around that model. So that's one area in the home improvement.
So just a second, since we are trying to understand a case study.
Yeah.
What is it's like an Angie's List kind of model?
It may not be Angie. It's I'll call it more of a.
But it's a vertical specific Angie's List kind of model, right? You have roofers that are going to be part of this service, this brand, and the umbrella brand is going to collect the leads and then distribute it to the service provider. Isn't that what you just said?
Well, no, actually, ideally, it's its own firms that are doing it. So it has to do vertical roll-up. So it does acquire roofing firms that in the local areas, right? But you wouldn't be able to have all geographic areas with your own roof service team up front, right? So this is very much a regional roll-up play. So it depends on which sector. So they started with Texas. So they have bought some firms in Texas. They're looking at other regional areas. And then, but from a customer perspective, it could be coming from multiple regions within the country. So that's essentially when you get the leads who are going to serve. So I think the strategy is that you be able to leverage the local partners, but because the technology is all about be able to give quotes and be able to find the kind of the construction optimization around the materials and the services in one scoop. So this is kind of bolt on the technology in addition to a traditional service model in this case.
I see. And one of the big value additions, technology value additions, is with drones doing the assessment.
Yes.
I see. Interesting.
And also, I think only because you have over time accumulate a lot of data associated with roof conditions, replacement cost. So you actually get a lot more data to a certain degree because this kind of accumulation of databases and data points. So with AIs, you'll be able to do very quickly, essentially figure out the cost associated with that, but also the kind of complexity, time required, the service and insurance associated with that. There's a lot of new angles that can attach to that the service space.
Interesting. There is a completely opposite trend, but it's kind of similar that I'm seeing Y Combinator put out there the types of companies they're looking for recently, a few months ago. And one of those companies, one of the types of companies like full stack AI.
Yes.
So it's the counterpoint of this is that one, you take something that is existing and built up, and then you kind of re-engineer and do digital transformation or AI transformation on it. And here we're talking about something that is built from scratch, but to do a whole full stack company, like a new insurance company or a new whatever, different kinds of companies. Have you seen that in your portfolio?
Yeah, we have. Actually, there's another company called Corgi, which is kind of they bought the insurance license. So the company actually is not that visible yet, but also in the Bay Area as well. So it's more of to be able to build the kind of the insurance agency that with the AI behind it. So we start to see more and more this kind of empowerment, kind of full stack that just beyond just selling the software, right? Traditionally, it's very horizontal. All our as the scalability is around how to sell the software into the traditional business and enable them to do more. But with the AI, sort of just because this become almost like a virtual employees, you can empower and scale this very quickly. So the new model becomes almost internally, there's a lot of AI service agent, doesn't matter what that agent is, right? Could be customer service, could be like the normal workflow process, enablement to more of the sales agent or almost like SDRs, kind of doing a lot of these kind of internal type of things. Then you have a service partner, which are human, kind of go out, still doing this kind of high touch model, right? So I think we're going to see a lot of these kind of things in high cost areas, right? Doesn't matter, it's legal, accounting, tax. We've seen quite a few of these different cases popping up, in addition to some of the example I just mentioned.
Now, what does a company like that, a full stack company, this insurance company, Corgi, what does it look like? Does it start with a very large amount of funding? What is the financial structure of a company like that you're seeing?
Well, it doesn't really need to be a lot of funding, but it does really. So I think this kind of company a little bit harder to build. So we're experimenting with different our investment theme as well. I think traditionally, if you think about who come into the space, mainly as the PE guys, right? So they have the financial engineering, they have the operational experience. In this model, I actually need to add in the component of the technology. So that takes almost the technology guys, the insurance, the technology expertise, the operational expertise, which is running the company and rolling out the company, and the financial expertise to actually construct a kind of business model that makes sense. So which is more of the extension beyond the full stack. So there's two models, right? So you mentioned the full stack AI companies, and you mentioned so this is like the almost extreme of where you can take this kind of the models into both the kind of the operation scaling in that sense. So really, as a lot of these, as a traditional, if you look at traditional PE model, traditional PE in this model doesn't actually, a lot of this is a venture debt enabled equity services. So you probably takes, you
No,
need.
I'm not talking about the existing company model. I'm talking more about that's kind of like an AI takeover model. You have to do what, a McKinsey or a BCG does to completely reinvent the workflow and put AI in every step of the way. That's a different model. That, of course, that if you're buying an existing company, that does need a lot of money to buy an existing company.
Yeah.
But if you're trying to build a new insurance company from scratch, that is also an expensive proposition. That's my question.
Yeah, I think there are certain areas where, for example, if you buy, insurance is state by state, so you do need a license to operate. So what Corgi has done is essentially they bought an insurance agency that actually have this kind of license capabilities and to be able to operate across multiple states, right? So that's always there's always the infrastructure acquisition side, which is sort of what you just mentioned. It's kind of capital intensive and costly.
Oh, I see. So this is not being started from scratch. It is being done with an acquisition and then building on top of that.
Yes, always this AI rollup type of model is always based on the buy-in and extension.
Yeah, but I was not asking you about AI rollups. I understand the AI rollup model.
Yeah.
I was asking you from this about this Y Combinator model of starting from scratch something that is a full stack company.
I think the full stack companies really depends on you. The question is how do they approach the overall go-to-market, right? So if the go-to-market, we start to see a lot of these kind of companies, if it's still in the service areas, then I don't think it requires a lot of capitals up front, because what they are leveraging is kind of more the computing capabilities, right? So rather than hiring a lot of people, if you think about traditional cost structures, it's mainly the infrastructure cost of the computing and then the infrastructure cost of the human, right? Those are the two big fixed costs. Computing areas already being kind of shrinking down, because old days when I was like 20 years ago, when we started VC, a lot of times you fundraising, you buy networking, you buy storage, you buy computing. So that's already been coming down because
Yeah, but AI has also pushed up computing costs.
Well, true. AI does, but at least it's a variable cost to a certain degree, right?
It is a variable cost. It's a variable cost, yeah.
Right. I'm talking about fixed cost. So how do you remove the upfront fixed cost? Even human is kind of originally is very much a fixed cost, but also if you think about AI agent,
yes,
you can test out your model 0 to 1. Once it works, then you can get 1 to 100. That's again, this a variable cost. In my mind, it's the scaling based on the customer needs. You don't need to get a lot of capital upfront. So we start to see a lot more innovations or a lot more possibility of people just starting with a few people and coming in, build a whole company, and doesn't require a lot of funding to test out different models. And when that's proven, then you can use the get additional fundings for that scalability, right? So I think that is where you still need the funding, because in this attention economy, it doesn't matter you're looking at the B2C or B2B. There's only so much people are remember or even be able to get into a channel, right? People be able to listen to your post. So I think that still takes a lot of funding, but initially experiment, I think as a startup or YC type of models, I don't think actually the cost structure, I think over the years has become better because
well, and I think the whole thesis of what Y Combinator, the reason Y Combinator is pushing that is because of this agent model that is developing. People are automating a lot of stuff, and if you have a clean slate, it's easier to automate a lot of functions and just get things going. And there is a lot of that going on right now in the startup ecosystem. So,
100%.
You can get very far with that agent model. I think what you pointed out is also true, is that go-to-market still is expensive. You can get something going, you can get a few customers and get it going, but the minute you get in the realm of programmatic customer acquisition, whether it's social media advertising or search advertising or whatever, digital advertising, digital customer acquisition models, that's where it's still expensive.
Yeah, there's I just think that as the VC industry will adopt over time, right? So I think more of we'll see a lot more startup on the beginning phase. Then I still think a lot of this kind of new. I mean, how do you actually scale the company? How do you find the right people? How do you go to market? That's still they need a lot of networks. So that's kind of the reason we, as an Alumni Venture, will still exist and be able to help them is by helping them with finding the right people to build the teams and to be able to find the right customers through this kind of networks to be
Network
able to
helps. Network
helps great time, right? That's what you're doing also, building out this great network, right? So in the end, there's I mean, we're humans, it is the network, but certain things, right, that we do day in and day out, mundane type of things can be automated through this kind of agent. So I do see the scalability of this model. And then I think there's a lot more to that we're discovering with the new possibilities of this agent infrastructures. And so we're very excited about this space.
Very good. All right. Well, Ray, do you have time to stay for some pitches?
No, unfortunately, I do need to run to the office.
Okay.
So,
all right. Thank you for coming.
Thank you. Appreciate you having me.
Bye-bye.
Bye.
Folks, we're going to switch to the entrepreneur pitch session. We have 3 pitches, so keep to the time. Remember, this is a safe working session. There is no need to be defensive or nervous. I have only one agenda, which is to listen to you and try to brainstorm with you on what would be helpful to accelerate your journey. If you disagree with me, that's your prerogative. We are starting with Antony Alappatt from Chennai, India. Axon Network is the company. Antony, please go ahead.
Correct. Can you put the first slide up? Yeah.
Your first slide is up. If you want me to move the slide, I'd be happy to do that.
I can't see it.
Your slide is up. Please go ahead.
Okay. Okay. So I'm only seeing conversation with Revu. So I just want to.
No, it has moved from that. People...
Okay. I see that now. Okay. So my name is Antony. I'm based out of Chennai, India. I'm the CTO of Axon Network. My journey, I've been in this industry for 30 years. I started with CPM on microprocessor, and then AS400, SAP, Java. So I've been through all iterations of the technology. And deeply, I have been, most of the time, I was in the trenches, basically in the ERP and enterprise systems. That is my background. What is... Are we moving to the next slide? Okay.
Keep going.
Yeah. So I think the slide is third slide.
Is that the technology KI slide, Yantra Mantra, or something else?
Correct. Yeah.
That's what is up right now. Do you not see that?
No, I'm introducing the second slide.
So please keep going. I'm not sure what's happening.
Okay. All right. Okay. So basically what we are about is what we're providing is the technology on which you can actually build autonomous agents. What we have is a language in which you can actually build what the network is and how they interact with each other. So there's no programming. We are just only mentioning what the agents are and how they interact with each other. And that actually runs on Yantra, which is the next AI processor. So that is what we do. And that's available on device and on any standard VM.
So you are not, this processor is not something you are trying to build, right?
No. This is a layer on hardware. I mean, this is a software layer.
Okay.
So it's a software layer now. And so we are able to program these agents in the software layer that runs on top of Docker.
Okay.
Okay. And so what we are approaching three markets. One is education, manufacturing, enterprise AI. Education, we are actually focusing on the PAL. We are becoming the PAL enabler, which is in a typical classroom, there are, backbenchers, front benchers. This allows you to move identify all the different levels, cognitive levels, and adapt the lessons to that. The next one is manufacturing, supply chain, manufacturing, all going from linear models, non-linear models. We are able to model that network. Enterprise, the same thing. What we are saying is, if you have adopters, we can build your AI, and you'll be able to build AI models right out of the bat. Because what we are proposing is that you don't need data, because you can't build future systems based on past data. So that's our assumption. So with that, what we are saying, okay, what your dream is, you build that. Okay, so that's three areas. In education, we are dealing with all edutech companies, and we enable their learning pathways, and the revenue comes when they deploy the systems in their customers. So,
Antony, for example, do you have any customer at this point?
Yeah, I'm coming there. Yeah.
Okay. Okay.
So now with the manufacturing, again, the same thing. Next, go to the next slide. So in the education area, we already have one customer. We assigned LOI, and they are negotiating in a state in Andhra for 1,900 schools.
Okay.
So that is already running, and we are talking to another edutech company. This is only in math. Now they're going into physics. So this is we model like that. And once we know that once this is up and running, then I will put a business development guy, and that will run independently. And then I will switch to manufacturing. We'll do the same thing.
So
we
can
are
I
working with,
let me interject for a second.
Yeah.
The methodology that we believe in and we have used for more than 15 years, and this is largely what is believed in the industry in general, is that you do not do three different areas. You pick one type of customer and go after one vertical. So
Correct.
if you're getting traction in education, I would stick to education and not try to do manufacturing and general enterprise.
Right.
That is, I have to tell you that. For some reason you have, I imagine you know that, but you have chosen to violate that code.
No, the idea here is I want to run. We can run this independently. That's what I want to show.
I think it's the wrong way to build a company.
Okay.
That is not how good companies are built.
Okay.
So
Here, yeah. Okay.
for example, if you're thinking about funding, the minute you put this slide up, you're out. Nobody's going to even talk to you. The investor community absolutely does not believe in this model.
Okay. All right. So anyway, that is the traction we have now.
So what is the traction? This POC that you have in education, it seems like that's the one concrete customer situation.
Correct.
What are the commercials of that? How much is that deal? What is the deal size?
Deal sizes, we are talking 1,900 schools. So that is around, that's around $200,000-$300,000.
And what is the time frame in which this is going to be available to you?
By the end of the year.
Okay. And what about others? So this school, or it's one school, or what is it? What is
the range of, we go through the states, right? So it is actually government schools which are they're deploying this.
Okay.
It is not. Yeah.
So conceivably, there are another 20, 25 governments that you can sell this to.
Correct. And different subjects.
So this is just one subject?
Correct.
So this is one subject in one government school system.
With one. So this edutech company focuses only on math. So now there are people.
What do you mean this
edutech
edutech company? You have, this is your company?
We don't directly go to market through edutech company. We are actually enabling the edutech company. We have a processor that we sell underneath. So we don't have the bandwidth to do for the learning materials. We don't have all that, which is what they have.
So the edutech company is your customer, not the government.
Correct. But the end customer is the government. Finally, government pays the,
So it is like doing some sort of an OEM model.
Yeah, it is just like Intel. You have processors, and then somebody sells software.
So is your strategy to sell all governments and all subjects through this one edutech company?
No, this company can only deal with one subject because that is a focus area. So we will now talk to other edutech companies who will have other subjects.
And there are other edutech companies that have that kind of model? How many such edutech companies are there?
There are around 10, 15.
10, 15.
From what I,
those 10, 15 will give you coverage of all of India and all the different subjects?
Correct. I'm thinking, yes.
And each of those deals are going to be $200,000, $300,000 kind of deals?
Correct.
So roughly you can get to about $5 million with this business?
Just on the education, yes.
And what happens after that? What else? What is the TAM? What is the total available market for this?
It is, see, we are going across many industries. So this is just education. So we are thinking there will be every company in this, in the world will have this technology. So that is our, but we are going.
Yeah, but
geography. We're going by geography and subject.
That's in education.
Correct. Only.
And what is the justification for trying to do manufacturing and enterprise, other broad enterprise and so forth?
Because my cost of acquisition is not high. Because this will be done. This will be just like we are doing to edutech companies. My cost of acquisition on a different manufacturing is not high. It is just initial POCs and having them incorporated and how it is done. We showcase it once and then it just runs. So
Yeah.
then behind the scene it keeps,
That
once they build their business.
That is not what determines your business strategy. I don't know that you fully understand your go-to-market strategy yet. You have done one edutech company. You want to do 10 to 15 edutech companies in India that are going to build on top of you, of your product.
Correct.
How long will it take you to acquire these customers? What is the timeline of just that business? And what are the resource requirements for just that business? What is the scalability of that business? Is this something that, let's say you want to take this out to, other Southeast Asian countries?
Correct.
What is the go-to-market strategy for that? So in any case, my take would be, if you have one thing that is validated, the value of reference customers is huge. Anytime you want to try to do something, if you have reference customers, like you have this particular edutech company, if you go to the other 15 edutech companies and tell them this is what I'm doing with this edutech company who's your competitor, that is a good way to sell.
Correct.
You will be able to get their attention and you will be able to work with them potentially. But that is not going to necessarily happen in manufacturing. The minute you go out to a different vertical, you need reference accounts in that vertical and the use case of that vertical.
Correct. So in the case of manufacturing, they came to us. That is the whole point. I didn't start off in manufacturing. So because ultimately all these companies are finding that everything is linear because there are fundamental problem in the technology. So they came to us to make it more networked, because machines are getting intelligent, and so your factories are going to be networked, and that is what we do.
Yeah, but
in terms of technology.
It's a very different use case. Manufacturing is going to be a very different use case.
Correct.
The whole justification of the verticalized use case strategy is that you really figure out one thing and you do it, you know how to do it, you do it well, and you do it at scale. That is the productization and repeatability. The operating word is repeatability. If you have any desire to raise money at any point, you have to focus on repeatability. This like biting from here and biting from there is not going to get you repeatability. And if somebody comes to you that is outside of your focus area, repeatable focus area, you say no. That's how you build a repeatable company. That's my input. You can take it or leave it. And
No
North
problem.
America, I don't think North America is the right market entry point for you. What is the evidence that you have that North American market is looking for something like this? Have you tested the North American market?
not yet, but I can because it will be the same kind of problem that is there that I know in terms of education.
How do you know?
The problem, because I have some people in education who I have tested it with. So
That's what I'm asking. Have you tested the North American market?
correct. In terms of, I didn't actually go and address what the scope of the market is, but I kind of know the problem.
Okay, it sounds to me like you understand the education use case well.
Mm-hmm.
And you have conviction and evidence that there is potential product market fit in education, potential repeatability in education. So focus your energy on education, and I would build a business on education right now.
Correct.
Okay. All right.
Okay.
We can talk more. Let me first finish the other two presentations, and I will open the forum up for more Q&A. Tainyue Yu, did I pronounce your name right?
Correct.
Okay. All right. Go ahead.
Hi, I'm Tainyue. So I'm a founder and CEO of Q3D Sensing. A little bit background about myself. I'm a serial entrepreneur, and prior to this, I started other companies, and the previous one was a long time. I started from typical Silicon Valley garage, and they eventually went IPO. And we also took the company private after the very bad market condition in 2022. Basically full life cycle of the company. And now I started another company, Q3D Sensing.
What kind of company did you do, the previous ones?
Previous ones, we built also 3D sensing technology that is more used.
So that's your specialty. That's your expertise.
Right. Yeah, I'm a technologist. Previous company, I was the CTO. And so we build 3D technology from semiconductor chips to building the hardware. That's the sensing hardware. We build the software solutions. The software is used for object detection, perception, intelligent perception. And then the product is used in the security, flow management, environmental sensing areas. Certainly the product can also be used in automotive, robotics, self-driving cars. So those are the bigger areas in terms of for the perception, because for the robotic system to navigate the world, they need to sense the environment and make a decision to proceed.
So what is this? What is this product or this business?
Yeah, so that was the previous question about previous. So that was talking about previous company.
Yeah.
So here for the new company, I'm more focusing on building up the spatial AI technology. Spatial AI meaning that we built in 3D environment. So that I think the root is all based on the 3D technology, even though that's distinctly different from the one I built previously. But otherwise, at a higher level principle, these are all 3D dealing with the depths of our environment. Like everybody has a cell phone in our pocket. This is a sensor where you compress the 3D world into 2D representation, right? You have a picture, you have an image, you have to take videos. These are all compressed images you capture. And what we're doing is trying to democratize the spatial data intake. And eventually that will have a lot of value to enable the automation, immersive experience, and the user-generated content for the storytelling. Mm-hmm. So I will go into more detail about what we like for how that's used in everyday life and how we want to democratize the technology and eventually bring that to everybody's pocket. Yep. Here is, well, we all know that Jensen Huang, this is a famous slide. The next frontier of AI is a physical AI. 1D AI for the LLM, large language models of speech, text, they're already automated, already get to consumers, into hundreds of millions of people. And then 2D AI for the images. Now, after last 10, 15 years of development, computer or machine can understand the image, right? You can know it's a cat, that's a dog. Not like 15 years ago, these are just the pixels, not have any meaning to the machines. But now the next frontier is, we say, the physical AI is where that's interacting with the physical world. There is the depth. There's actually intrinsically 3D world. However, the 3D data today is fragmented, costly, and hard to scale, because just if you ask anyone, hey, do you deal with the 3D data? Like, usually people don't have access to the 3D data or high quality 3D data. So next slide. Next slide.
I have moved your slide. I think there's a lag somehow.
Oh. Okay, all right, yes. So even though that's not very much into consumer realm yet, but then there are already industry happening in the background that's already tens of billions of dollars, where the 3D capture is already seem into many aspects of our life that people may not be directly consumer facing. For example, in archaeology preservation, not dam, we know that after 5 years after the fire, now that's rebuilt, reopened, because of a lot of the details are preserved by 3D capture. So that's why the engineers eventually rebuild Notre Dame and so fast. And in 3D space planning, in public safety, you do the scene capture. So these are already happening in some of the parts of the country, and factories, construction monitoring. So any industry that deal with the structure, like build, ever since human come out of cave, we start to build roads, bridges, shelters, schools. So any industry deal with the structures from the 3D capturing, and that's already happening in the background, even though not to the consumer level yet. So why that high fidelity 3D capture is so difficult to scale? There are multiple reasons conflicting together. Mostly because look at the lower left side, there's a very limited 3D capturing tool. Like usually people don't have a good tool to do the 3D capture. Either those are professional tools, very big, heavy, tens of thousands, or if you have an iPhone, is Android, but if you have an iPhone from year 2020 has incorporated the LiDAR sensor that is a sensor into it, you can indeed capture 3D environment that is near range, is small. You can capture a 3D model of your small room, capture of the sofa, capture a small environment, small objects. But then for any of structure that's much larger, like convention centers or any big space, it will be very difficult to build a full model using iPhone because you have to walk the whole space in order to do that. So then the only resort is just the professional tools, which are very expensive. That's usually in a highly trained environment. And also the 3D capture is complex, where there's there are lots of environmental light conditions that getting into the root of the sensing technologies that have to deal with indoor and outdoor capture. And also more importantly, interface with the user. It's complex and fragmented pipeline, because those has been traditionally being professional tools. The professionals are highly trained to use those tools, and then they go from software to software to software, eventually build to their needed workflow. So that's very difficult to get broad-based usage. So what we do here is we build a spatial AI solutions that start with a point of capture device. So we do have a hardware component to it. This is a depth sensor, and that's a point of capture device. And then this one can be the mobile extension. And then you can, same as you take videos with your phone, this one you have the depth. So then we do the depth sensing, we do the sensor fusion. So then RGBD, basically we build.
Are you trying to build a consumer company?
No, we are not a consumer electronics for day one, even though there are future B2B2C potentials, because the tool, the technology we built are so small, so mobile, it's easily to think, wow, okay, people
but
can imagine.
that's not the way to think about it. You have to think about application. You are thinking like a technologist, which you are the technologist. But you have to think about what is the market, what is the application, what is the use case that you're going to solve. with this.
Right. So the previous slide,
hang
we
on,
showed the-
listen to me for 1 second, please listen to me. You put the slide up where there are applications of 3D capture used today, and there are too many of them.
Right.
In each of these application areas, there is an ecosystem of 3D capture, of how 3D capture is being applied and who's supplying that technology, who's using that technology, how is this going to market. Do you understand this ecosystem?
Yes.
You understand every single one of these ecosystems?
Yeah, we have spent a lot of time to map out who's who in those playing the landscape.
Then maybe
then
you can
we
answer the question. I'm going to ask you the question, where is the fastest entry point for your technology using the current ecosystem within one of these?
Yes. Faster would be the AEC industry, architecture, engineering, construction. AEC industry is a tens of trillions dollar industry that is, as one of the 15 industries in the world. So AEC industry is where our entry point, where I do not need to do customer education to tell them what the technology is, because they are already being using that laser-based.
Currently, how is the construction industry? It's not in architecture, it's going to be in construction, really. How is the construction industry currently solving this problem?
So as you can see in the picture, construction monitoring, the person there standing there with a tripod, that they are using the technology, like the legacy technology that is expensive, bulky. I think the tool this particular person is handling is likely to be $50,000 to $80,000 tool. They are currently
what is the price
using
point
that.
of your device?
So we can be 10,000, even though we can I think this get into the initial market pricing exercise. One in our customer interviews, we realized that if that's a too low cost, we can go much lower, but then the customer will not like that to be so much lower, in a sense that there is a credibility. We need to initially establish the credibility.
Yeah, but I don't think credibility and pricing, I don't think that argument holds. I don't agree with that argument, but besides the point, do you have customers in construction that you have already started working with who are evaluating your product?
Yes, we have a previous version which is much bigger. We sold 100 of those. Even we don't want to spend too much sales marketing into that initial market test product, because that's very big. That's our initial entry point. So then that's already 100 sold, shipped globally to the customers. And then we focus on building a small version. And now this is about to release later this year. And essentially that earlier exercise enable lots of touch points with the customer, because why do you buy that, not buy others on the market?
This is very interesting. If you have a product that is orders of magnitude cheaper than a product that is being used by that industry, that you can replace that product with, and that it is a necessary, it's an, already the market understands the usage model of that product. That's a very good positioning opportunity. It's a very, so where do you need help? You need help with go-to-market strategy? Where do you need help?
Well, a lot of times we think through, but then that's always good to have other eyes to look at that, right? So, and I came to you is mostly I saw one of the comments in LinkedIn about the bootstrapping.
Yeah.
So then I said, oh, okay, all right. Even though previously I raised hundreds of millions of dollars in my previous venture, but here, okay, how do I be most capital efficient?
Yeah.
And also, just like Ray talking earlier, there was actually a very good interview. I'm trying to build that AI native way, meaning that can be as much capital efficient as possible. Of course, we have a hardware component as a point of capture device, then that has its own distribution because you have physical goods. But otherwise, we do have intention to disrupt the traditional industry. Construction, AEC, a very traditional, thousands of years industry, and to try and have a digital transformation.
So that go-to-market strategy and stuff, we can teach you how to navigate all that. That's probably not your background, but we can teach you that. we can certainly help you how to, help you figure out how to do this in a cost-effective way.
Right, yes. So our current go-to-market, we have a customer already lining up for the early adopter programs because we're about to release and we're building up that program and go into the motion. And then that's our very first go-to-market.
Great.
So that's more, for the capital, I guess that's more into how do we VCs, yes, there are some VC fundings, early angels, but I'm more trying to build it in a more AI native way. That's as Ray's talking about. I would like to follow up with him afterwards. But otherwise, that is an experiment. It's also new thing that so many people doing. So in addition to building the products, building the sales, there's also building the company in a AI native way. So that's quite a learning, I would think, because that is the whole world is trying to learn that new thing.
Of course. Yes, of course. Absolutely. But
I see a question on the side. I didn't catch that. What's the question?
The question is, how much of an upgrade will this be from iPhone 3D mapping?
Okay, great question. So we are 10x better performance than iPhones. Well, of course, performance in many aspects. That's hard to just use a single metrics. But otherwise, iPhones, usually if you look at iPhone spec, it's a 3 meter, 5 meter, 8 meter maximum if you have indoor condition. Ours can be 10x, I would say 30 meter, 50 meter. But a lot of our customer telling us you do not need to get that long range. So that's why we're focusing on 20, 30 meter range. 30 meters already 10-story building high. So that's quite a space to cover already.
Yeah, very good. All right, well, let me do the next presentation. We can take more questions. I understand what you're trying to do. And I think what I see in your company is that you can definitely build something capital efficient because you already have something that is resonating with the customers. So that's the beginning of a successful bootstrap business. And you can always bootstrap first and then raise money later at a much better valuation. We can definitely we can help you with all that. Your next question is, why can't this tech be used in bigger market of future like industrial consumer robots?
Yes, absolutely can. So that was actually the intention for the go-to. We have to have the very day one entry point. So to us, even though there are so many applications, we have to do minus. We don't do that for day one. We have to be very much focused on the immediate execution, closing the commercialization loop, and then open up into other markets because there's potential into so many other.
If you're trying to bring any product into market, it is essential that you choose an entry point that has velocity. And it sounds from what you've described, the construction industry would have velocity because there is an existing product that is really expensive and you can go in without having to do too much education. It's just a product to product comparison. This is a much better product, much cheaper product, much newer technology product. That's a much faster way to get into the market. And I think that you can build a very interesting company using this on top of this technology. All right. Yes. Very good. Very good. Nandini, you are up next.
Yes. Hi, everyone. I'm Nandini Zunder. I'm 19 years old and I'm a law student and I'm building MeloMatch. Let's get straight into it. Next slide, please. So MeloMatch helps creators match their photo to the perfect song, caption, and hashtag it, which is emotionally aligned, personalized, and instantly postable. They upload an image, they connect their Spotify, Apple Music, YouTube Music, whatever. Our engine reads its mood, tone, vibe, context, and delivers a complete creative kit that just feels right. It's not a trend tracker or like a design template, but it's a system that aligns emotion with expression. So creators who want to feel what they post, not just post randomly. So next slide, please. The problem right now is that creators are stuck in a creative drag. They spend like 30 minutes trying out songs, rewriting captions, tweaking hashtags, and still feel unsure about what they're posting. And now you need to post a lot of content to get viral or like be on the like get traction. You need to keep posting content constantly, so you lose personalization. You just fall into the trap of algorithms. So what we're trying to do is we give clarity. Tools that they're using like CapCut edits, Canva formats, TikTok pushes trends, but nobody helps them feel emotionally aligned with what they're posting. And MeloMatch fills that gap instantly. So next slide, please. So there are over 200 million creators globally, and 50 million of them post constantly on Reels, Shorts, Pinterest, and everything. So what we're trying to target is 25 paid users over the next 18 months. These are high intent creators already paying for tools like Canva or CapCut. So like so this is what the market is basically. Next tool, please. Next slide, please. So I think I already briefly covered this, but is what we're trying to do is we're going to align them with everything and try to build with emotion. Okay, next slide is perfect. So the business model, what we're trying to do is it's a SaaS product. So there's no premium. Users pay from day one with a 7-day refund policy. And like we're even targeting like small users who want to just keep posting, which in Indian rupees will just be 250 per month, which is, and then it goes up to 2,500. So it access all kinds of people who are trying to get on the platform or trying to launch something or just starting posting social media or everything. So right now we're focused on B2C, but in the next phase we want to go into B2B licensing for agencies with content studios who need scalable creative kits. So the more and more you upload the brand you're working with, or the more and more you try to do something with MeloMatch, we understand it more and we develop like a sort of emotionally intelligent AI to understand your overall brand and give you posts that actually resonate with what you feel and not just posts for themes and all of that.
So what about all the copyright issues of all this? You can, if you post something with somebody's song, do you need to get that copyrighted? They need to deal with the copyright issues?
So there is no copyright issues. These are all songs that are already available on Instagram that are used for reels, shorts, TikTok trends. What we're doing is you have a Spotify playlist. You have like bunch of songs on your Spotify playlist, and you've labeled that playlist happy. So that's how you feel. That's the music you listen to while you're happy. But when you go to Spotify and type happy, there are like bunch of songs that you've never heard of, but you just post because that's what's happy. What we're trying to do is the songs you feel connected to are the songs that you are posting, and there's no copyright issues because they're already publicly out there.
So the validation story that you have here, are we all real? That's a real one. This is somebody who's using your product?
No, this is not someone who's used our product, but this is someone who is. So what's basically happened are they're making memes out of this problem right now, saying that I'm spending 30 minutes trying to find a song. I'm spending 30, 40 minutes. I'm stressing out for the next 3 hours, even though I have a perfect picture. So we validated our, like what we're trying to solve through this. And then what we did is we built it. We built and we ran a test run with the maximum limit for a development in Spotify right now is 25 users. And just with word of mouth, we filled it in less than 2 hours. So then we shifted to YouTube Music and Apple Music to see if that continues. And still it maxed out again. And then what happened was we created a wait list and that's constantly growing. And we did this all with zero marketing, zero. We like, even if you go to our MeloMatch Instagram right now, there's like 3 followers, just me, my dad, and my brother. So all just seeing how people.
How ready is your product?
So we have a demo, we have a sample, we're ready to publish. But the thing is, we want to develop a little bit more on the emotional intelligence aspect of the AI, and we need to get a little more like funding for that. So our main problem right now is I need a little bit funding. So that's what I'm trying to do. But the product is ready. There's a sample right now. You can go type melomatch.ai online and you can see the product work. I just have to add you, and there's a waitlist system because it's not published yet. It's in a testing feature still. So
Nandini, this is not a fundable situation by professional investors. This is a friends and family funding situation. So how much money are you looking for?
So what we're trying to do, I'm looking for $100,000.
$100,000? Holy shit. There's no way you're going to be able to raise $100,000 for this.
No, so because I need a development team. I want a product and UX design. I want to expand the team before
you can
launching.
want it. You're not going to get it. You can
Can
want it.
can you
You're not going to
elaborate
get
more?
it. This is not, as far as I'm concerned, this is not something that, this is the kind of business that people are developing and getting lots of users for out there. So tell me more about what is your development situation? Who's doing the development work? Are you doing the development work or somebody else is doing the development work?
So my brother is doing the development work. He's an engineer currently right now who is doing specialization in AI. So it's just me and my brother right now that's working on MeloMatch.
Are you familiar with these products like no-code products like Lovable and Cursor and so forth? Does your brother know all this?
Yes, of course, with using Lovable and Cursor and all of that, but that can be done with our actually website itself is built with Lovable and then develop further all of that. It's not like we're familiar with all of these platforms, we're using them and leveraging them.
So, but what is the gap? What do you think you need to do that is going to cost you $100,000? In India, $100,000 is a lot of money.
So we want to expand the team and actually be able to reach people, right? So right now,
It's
just
not
with
going to
me and my
work.
brother,
It's not going to work until you validate that your product works with the wait list of customers. The good news is you have a wait list of customers. Bad news is you have no idea whether your product works or not.
so in the
And you're
feedback,
saying you need $100,000 to prove that your product works. That doesn't work. That equation does not work.
isn't it the fact that the 25 people or the 50 people who have used the product saying that they want more of it, kind of a validation itself, and thousands of
What do you
creators.
mean more of it? If I'm gathering what you're saying is right, I haven't used the product, so I'm going by what you are saying here. The product doesn't fully have the capability to do what you're saying you want to do.
No, actually, it's doing exactly what it has to do, but it's not doing it in the scale we're promising. Right now, I said it's giving you emotionally intelligent content with captions and hashtags and everything. Right now, it's only doing music.
As opposed to
giving you a whole creative kit and understanding your whole brand, is just understanding the photo right now.
So right now it's taking the photo, understanding the photo, matching it with music, and it's doing that well.
Yes.
And that is of interest to these people who are already using your product or are signing up to use your product. Is that of interest to them?
Extreme interest. They've used it to put their stories. It's just been 25 people because Spotify has a cap now. In May 2025, they changed their policy, which
And
made
are
us
they
pivot to
paying for
YouTube
it?
and Apple Music.
Are they paying for it?
Since we haven't officially launched it, they can't pay for it. But when we surveyed, will they be willing to
this
pay
is
for
the
it at
way.
these rates?
Here's how you're going to raise your $100,000 that is viable.
Okay.
What is the price that you can charge these people for this functionality that you said is working exactly the way you're saying it works and is of extreme interest to your customer base?
So that's the $2.99 one. So when we did a survey, not the other two, just the people, the 25 people, they said they will be willing to pay this, which is 250 rupees per month in Indian rupees.
Okay, so then just sell that product. Start charging
Okay.
them for that product and get 100,000 or 50,000, even 30,000 people to buy that product and pay for that product. And then you can use that money to build what you need to do.
Okay.
So one of the tricks about how to build a business is create a minimum viable product. And in your case, you have almost gotten to a minimum saleable product. Something that you have a customer base that is willing to pay for. That is fantastic. Congratulations. You've done something great. So give yourself a gigantic pat on the back. And now go and sell. Take that as your first product. This is your first product. All the other stuff is going to come later, but take this first product and turn that into a product that is monetizing. And get as many customers as you can for that. Get 30,000 customers, 50,000 customers, 100,000 customers, and get that business going. And then you will have the resources to do more development with. Okay? Very good. Okay, I think we have covered all the presentations. Let me spend a moment explaining to you how to use 1M by1M, and then we can take more questions. We have 20 minutes, okay. So 1M by1M is completely virtual and completely global. No matter where you are, you can use the program, 1mby1m.com. The premium program is an annual membership fee-based program, $1,000 a year, and you can get mentoring like this on a weekly basis when you are ready for it, and we will get you to that point. If your business has the capacity to get to fundability and you need help to get there, we will get you there. And then we have a terrific network of investors who fund our businesses. We have a curriculum, so many of you need to learn things from, methodology and curriculum. We have a case study based curriculum that is part of the premium program. And then I have a lot of influence on LinkedIn in particular, and we do let you use that influence to get, distribution, especially on LinkedIn. So that's the influencer marketing part. This is the premium program. If you just want to access the curriculum, basic is a good option. That's $99 a month for curriculum only. It does not include the mentoring and the investor introductions, influencer marketing, all that, but it's okay to start there if you just want curriculum access. So go to the website, look at what to expect from premium, what to expect from basic. We get requests for one-on-one consulting. It's available. It's much more expensive. It's $1,000 an hour. So if you want to use that, you can use it, but it's expensive. You can pitch at a free roundtable once, and then you have to be in the premium program for ongoing coaching. We have 3 more free roundtables in July. So if you're planning to pitch in an upcoming session, please go ahead and sign up, and Maureen will make sure that you have a slot. And if you have questions about the 1M by1M program after this session, Irina Patterson is your contact. If anybody has more questions, I'm happy to take them. And if you're in the room and if you want to talk to me right now, you haven't talked to me, you want to talk to me, and if you want to be put on the panel, just let us know in public chat or send Maureen a note asking for it, or raise your hand and Maureen will switch you to panelists and you can talk through your computer. Okay. Questions? Anybody?
So it's okay to ask a question?
Yes, absolutely. By all means, please.
Oh, okay. Yes. I think some of the questions are more brainstorming. It's not necessarily have a definite answer, in a sense that we would like to build the core part of the business will be the software, the data, the platform, the back end, and then there certainly have a front end attached to it. And initially, the market is as I mentioned, the professional market. That's certainly tens of thousands. Even if we had 10x cheaper, let's say $5,000 or something, then. But I still would like to flip that into ultimately a SaaS model. Currently, if we build the financial model, that is very much top heavy on the beginning, because the hardware is, if that's a couple $1,000 for the software, usually you don't touch that much. It's not like Autodesk software that you pay thousands per year. And I'm more thinking out loud that would like to build up the future platform where over time, hardware become a smaller percentage of the total revenue. And
you can do that.
I think
you can do that. If you right now you have one product that you have more or less designed, and a first version has been built and in the hands of customers, and you're close to getting a fully formed hardware product that you can get to people and people can get value out of. So that's what you use. That's what you lead with. You build the relationships, and that gives you permission and the customer relationships to then go in and design the rest of the data infrastructure for those customers. Yeah.
Yes. Yeah.
It's a good position.
So, okay.
It's a very good position to be in. If you have a sensor that is generating, spitting out lots of data, and then you want to also build the data infrastructure and what you can do with that data infrastructure, but you need to understand the use cases of what you do with that data or what the customers want to do with that data. And that's going to vary from industry to industry, which is why the industry specific understanding and domain expertise that you develop through those customer relationships is going to be really important.
Yes. So maybe it's to my patience because there are things you have to do sequentially to get it going while my mind is thinking far ahead.
Yeah,
but I have to be more patient.
That's just something, that's just the reality of how to build a business. You have to work with that.
So what's your view on the service business? Ray touched on that, right? So Ray talked about like roofers. Those are very much service business. And then I think whether you mentioned or Ray mentioned, that's not necessarily need venture capital for that, because if you go out, sign up a roof a time. And but now I see that Alumni Ventures, Ray, and their leading investors are investing into those areas, which
so for
traditionally
you, I think you don't need the answer to the generic question. The generic question is a much bigger question. If you want a generic answer to the question, there is a Udemy course that you can do, which is my AI services companies case studies, AI services startups case studies. And that deals with that question in a more, broad, comprehensive way. But I'll put it very much contextually for what you are doing, which is the most important thing for you. What I would do, we have a track in our program called Bootstrapping Using Services. So what I would do is once you get a critical mass of construction companies using your product, the hardware product, you could do a services business on those companies that take the data and work with those customers to build, what they want to do with the data infrastructure. And if you do that with 10 customers, 15 customers, you would have that productized and then you can sell the product. But it's still a SaaS product. And that will be a very powerful way for you to build this company very capital efficiently, very, very capital efficiently. So each of those, let's say you have $5,000 products inside this construction companies, you probably have many of them. Each deal size is going to be larger. But each of those depends on what are the use cases. I don't understand the use cases. I suspect you don't fully understand the use cases either at this point. But as you go in and start doing those engagements, you will start understanding the use cases and the ROIs and so on and so forth. And you would be able to build much larger deal sizes. If these construction companies become $1 million deals between hardware and software, $1 million a year kind of deals between hardware and software, and you don't really need outside money for that, you can build a very, very powerful company. We know how to do these things.
So I will study the course you mentioned, and also I will look into the AI for service. Like you mentioned the two things, I will note it down and study those.
If you want help, you should join the 1Mby1M premium program and work with me on a weekly basis, and I will be able to help you figure out how to put one foot before the other in terms of building the company, including company structure, financing, everything.
Okay, thank you.
You're welcome. Anybody else? Question? I see other people asking questions. Shreyash, Jitendra, you guys are asking questions. Where are you joining from? What are you working on? Let us know if you'd like to talk. Yeah, Jitendra would like to talk. Maureen, could you put Jitendra in the panel?
Hello.
Yes, hi.
Hello. Can you hear me? Yeah, hi.
Yeah.
Nice
Where
to
are you
meet you.
joining from, Jitendra?
I'm basically from Maharashtra, India.
Uh-huh.
There's a tier 2 city in India called as Amravati.
Okay.
From your first president, woman president of India belonged from Pratibha Patil. So I'm from her city. But I had done my education in UK. I had done my MBA from UK long back in 2007. And we are working on a super app like WeChat for India and global market, basically, where we want to have, because right now people are using many apps on a single platform, or either on Android or iOS, and there people are using like 10 or 20, 15 apps every day to do their work, like say doing social networking, chat, and all other kind of stuff like e-commerce and everything. What we are planning to do is bringing a super app where they can have access to all those apps as third-party apps, as well as our own app where we'll be giving social networking and chat along with the wallet integration and payment
Jitendra,
integration.
I have seen many of these kinds of pitches in this forum over the years. These are very expensive to build apps and very expensive to build businesses. I would suggest that you not go down that path and do something that is where the capital risk is not so high. You know, if you have a business where the capital risk is so high, the risk, the probability of failure is also very, very high.
Agreed.
So if you can, you know, kind of look at what your expertise is, what your unfair advantage is, and come up with something that is more capital efficient that you can build and, you know, get to a certain level of validation so that you can start attracting capital if that's necessary. You know, some businesses can be built without capital. I actually think Tianyue's business can be built without capital, and she would, I think she would have the luxury downstream to be able to take capital if she wants to take capital, if she plays the hand right. This is the type of business that can be built capital efficiently and then can attract capital eventually. And if she has, she will be in the luxurious position of having the choice of taking capital or not taking capital. And you may have seen my you know, videos where I say, do not go to VCs as beggars, go as kings. This is the situation where you can go to VCs as kings, where you have built validation, you have built market acceptance and market interest, product market fit. That's the kind of situation where your capital risk is minimized. So that's really, from a philosophy point of view, methodology point of view, in this program, that is what we try to practice. So any business that requires a lot of capital out of the gate, we try to work around that and try to create a business strategy that is much more of an organic business strategy so that you can get to the point where you have that luxury of attracting capital, and if you want, say no to capital. So what did I advise Nandini? The same thing is that she has a product that customers are finding useful. So at this point, the first thing she should do is just sell the hell out of that product and make as much money as possible out of that product, and then, you know, build on her product roadmap. But at the moment, the first thing is not to go raise money. The first thing is to go sell what has found market
And then
acceptance. Later on, she's going to add functionality as she develops resources and so on. And at some point, there may be enough velocity in this company that this can attract capital, no problem. But if we get there, then you can make those decisions. But in the meantime, you have to put one foot before the other and generate traction.
So first you are saying that once we develop something, one or two of those things.
Something, one thing, not one or two of these things. One thing.
Mainly social. Because the basic, basically we want to build a social networking, then social e-commerce.
Social network, building a social network project, app is extremely expensive. Customer acquisition is super expensive. This is not the kind of business that you can build capital efficiently.
Okay.
So you need to, I think you, I would say, should revisit ideation. You know, we have ideation stage companies in the program in 1M by 1M. You can do your ideation within 1M by 1M using our methodology and resources, and I would be able to steer you in the right direction as you go along. But you know, if you go down a path where you put all your emotions and your energy and your resources in an idea that is not going to eventually succeed and validate and waste many months, maybe sometimes many years of your life, that is not a good way to play your hand. So try to manage the ideation process well so that you make the right decisions. And then if it's a question of spending 5-10 years of your life building something really powerful and interesting and exciting, then if you've done the beginning right and you've made the right choices, then the rest of it is going to come out right as well. But if you make bad decisions up front, then your 5-10 year journey is going to be full of failures.
Okay. Thank you. Thank you for the advice. Yeah.
You're very welcome. Anyone else? All right, we're going to wrap up and see you next week. Bye.